What's up, everyone, and welcome to 2023. So for 2022, the stock market had its worst year since 2008. Looking at the heat map from this whole year, we can see that there's been a ton of selling pressure, but not all stocks have been created equally. We can see like the oil and energy stocks did so much better than almost any other industry, where a lot of other industries, especially to do with technology or any growth stocks or anything like that, suffered big time. In this video, we're going to go over some of the top plays to get us started for 2023 and some other important news to know about. But Tom, let's get right into today's episode.
100%, Mike. And like you said, welcome to 2023, guys. Hopefully this is a lot better of a year than we got last year. And I will say the S&P 500 had a pretty good move up Friday, I should say, and it ended up having a pretty good close of the year. So that gives me a pretty happy thought as far as momentum, at least for day trading heading into this year. It was nice to see that move back up. And, if we could get back above this 384 to 385 resistance on SPY, I feel like we could see a pretty good move up tomorrow morning. But obviously, I think we're going to see a pretty big jump. There's going to be a lot of volatility, I think, as the new year starts to happen. If we look at the SPY, Mike, on the daily chart from this year, look at the very beginning of 2022. We pretty much, that was the very high of the stock market. And then we started seeing the S&P 500 at least dipping off from then onward. So I'm very curious if maybe we'll go green to maybe start this year. And maybe that'll be how the year trends on if we do see that happen. I don't think that has any necessarily correlation overall, but it would definitely be nice to kick off the year on a nice note. And a lot of tech stocks were kind of flying up on Friday. Like, look at Netflix here. They had a nice 1.29% move. Apple actually recovered back up into the green, which was nice. And Microsoft was even up. So that's good to see, Mike. And hopefully we can kick off 2023 on the right note here. I know that, man, it was just such a rough 2022, especially looking at that heat map. Like you said, so many stocks were down. Pretty much the only sector that had a lot of success was oil. And man, some of those stocks exploded. Like, look at Oxy, 115%. But then we have tech stocks like AMD down 55%. So it really offsets.
No doubt. So a lot of times what we see in the market are just constant rotations. So for example, if we're talking about OXY or Oxy and how it's up over 100% over the past year, like one stock or one group of stocks or one industry might perform a lot better than the whole market for, let's say, a year or 6 months or whatever the time frame might be. But then in like the year following that, it can be the other group of stocks that are actually leading. So basically what I'm trying to say is, if we look at all these oil stocks right now, while they did the best last year, it would not be surprising to me if we saw tech stocks or just other stocks besides oil stocks really lead the way going onward, because it's really, really hard for any set stock to essentially double and then continue to lead the way the next year as well. So the market always has these rotations happening in multiple different time frames. Some of these rotations happen over the course of a couple minutes through very short-term trades, while some take years and years and years to play out.
Yeah, exactly. And I'll tell you what, Mike, some of these growth stocks like DraftKings, Zoom, Palantir, I mean, you can almost name any of the growth stocks this year. They've been really falling off. Even like Lucid, Rivian, and those EVs have been falling down too. Tesla's down like 67% on the year. Like, look at that big drop. These growth stocks need a huge rotation. And a lot of people still have a lot of fear right now about the stock market. And I keep seeing a lot of bad articles about recessions in 2023. And looking at the Wall Street Journal, Mike, they put out a huge article that could maybe hinder some of those tech stocks going up this year. I'm not saying the article is going to hinder it, obviously, but a lot of people and a lot of economists at 23 major financial institutions expect the U.S. to have a downturn this year. And you can see the Wall Street Journal really putting out like some scary predictions here. Like, they predict recession and all that type of stuff. Whenever you read into this stuff, Mike, it is pretty rough. They talk about, obviously, the bank's still tightening right now. Rates are still on the rise. Even though they might be like lowering the pace of the rate hikes, it's still the rate hikes in general. It's just 50 basis points instead of 75. And then we can see the yield curve, Mike, is still obviously very inverted right now, kind of like in 2000 and 2001. So it's still a crazy time in the economy. I wonder how 2023 is going to go out. And guys, let us know in the comments how you think it's going to play out. Do you think that we're going to see the SPY and Tesla possibly recover back up a lot? Or do you think that we're going to continue to see the SPY move back down, maybe towards 350 or 320 or 330, somewhere like that? Or do you think we're going to recover up above 400 again? Let us know in the comments, because man, it's been such a crazy year. I'm really hoping for a nice uptrend, Mike, but I can't wait to hear what people have to say.
You know it. All right, Tom. Well, I want to get into some good setups for 2023, specifically for tomorrow and throughout this week. You know, these are short-term setups, but they are good setups nonetheless. And the first one is Amazon. So Amazon took a beating in 2022. And right now, in my opinion, it's at a crucial level for the short term. It's right around like this, like 81 to like $85 area. It's pretty oversold in the short term, like a lot of stocks are. Looking at Amazon, they have some pretty tough resistance around $90 a share, $88 a share, and a little bit of resistance right around $85.80 per share. So for this week, I am looking at it for a potential upside play. Those are the three resistance levels that I have on watch for this stock, but Amazon normally provides some pretty good intraday moves for short-term day trades and all that good stuff.
Yeah, it definitely does. Amazon's one of those awesome stocks. It always has a lot of good movement, no matter what. There's a lot of volatility in it. One of the more popular stocks out there, and it definitely has some fun options, Mike. I'll tell you, Amazon has been one of the funner stocks to trade, especially since they had the split. Back whenever they were $3,000, it wasn't quite as fun, but I feel like now it's a lot better, more manageable, especially for a lot of traders out there too. I'm actually going to talk about a pretty big stock as well, which is going to be Netflix here. I noticed that Netflix had a pretty good pop up on Friday and pretty good recovery, kind of like Amazon did in the rest of the market. But if I see them start to break out above this $300 resistance, I'm going to watch for a nice pop with Netflix. They're hovering right around 300. I feel like if we could get back above there, we could maybe start to retest 310 and then maybe 320 as the week goes on. If we go to the daily chart, there's actually a pretty nice gap here that we might be able to fill over the next week or so. So I'll kind of be watching that with Netflix. And, if we start off the year on a good note, these tech stocks like Amazon and Netflix should do pretty well.
Awesome. I'll make sure to keep it on my radar. Another one I'm watching is Intel. So I know Intel is not like super hyped up or anything like that, but they are double bottoming in a pretty big way right off of this like $25 to $25.50 area. It is pretty oversold as well. And I just think the risk reward ratio on this one's pretty awesome. Like in the worst case scenario, it maybe breaks down to the lower edge of that support right around like, like I don't know, maybe like $24.50 or so. But in like a good situation, this thing might run all the way back up to 30. So I just really like the risk reward setup with this one right now.
Yeah, I like that a lot too. If it breaks down, you could maybe have a stop loss, maybe around like $23.50, maybe $23. But like you said, if you run up, maybe somewhere around like $30 or so might be a good target. I like that play, and I do like that momentum down here off of that double bottom bounce. I think that's pretty awesome, and hopefully that support around 25 keeps holding up for us, because man, it's brutal right now. So many stocks are at support. It's just hopefully we get more bounces back up. Talking about another big support is Roblox. I feel like this growth stock is also around support, around $26, bouncing back up in a big way. Again, they have another gap to fill on the daily chart here, kind of between like 29 and 31. So I feel like that we might be able to get up to maybe $31, $32 this week, maybe if we have a good jump up. But it's one of my favorites. Roblox has been a huge growth stock. I will say, Mike, they have a lot of monthly active users, and I still can't believe how much growth that this gaming company has had over the past 4 or 5 years. So I'll be watching it. I'm really keeping it on my watch list just in case those growth stocks pop. I feel like this could follow along too.
Sounds good. Alrighty. So Tom, it is now time for the momentum plays. And funny enough, the first momentum play is actually Roblox.
Yeah, that's awesome. Roblox, my play right there. We knew, Mike, with the momentum heading forward, go ahead and make them break above. I would say 28.50 heading into tomorrow morning. If they break that in pre-market, then look at 28.60. They're hovering right around 28.50 right now.
Sounds good. With the next one, we have WBD, another momentum play, also to the upside.
Yeah, and this one is actually at a pretty big resistance as well. I know we talked about this one last week, and it kind of bounced off resistance. Hopefully we can get up above this resistance again right around 956. So if we break 956, I'll look for some calls on WBD. And I will say, Mike, look at this one. It's been flat for like 2 weeks now.
Yep. All right, with the last one, we have Apple, and we need both directions.
AAPL. So they actually had a pretty good recovery on Friday. I would say to the upside with Apple, if they can break out above $130.50, I will look for a nice push up. That is actually a pretty nice resistance, and we close right at 130, which is pretty key as well. But if we fall back below 129, then I might start to look at puts. But I will say, I'm mainly going to watch that level to the upside, and hopefully the market pops up.
Sounds good. So we're watching Apple for potential day trade to the downside tomorrow, only if it breaks below the level Tom listed. We are also watching it for potential day trade to the upside tomorrow, only if it breaks above the level Tom listed. We're also watching WBD and RBLX for potential day trades to the upside tomorrow, only if they break above the levels Tom listed. But it is now time for the big money trade of the day. We have $1.25 million going into none other than WBD. So this trade is a little bit advanced, but we're going to break it down in a nice and easy way. So basically, we had $1.25 million go into a call debit spread for WBD. Essentially, the smart money bought the $12.50 strike call options for January 19th of 2024, and they shorted the 25 strike call options for January 19th of 2024. Overall, I paid $1.25 million for this, and they will make a maximum profit if WBD is at or above $25 on January 19th of 2024. The main thing is that we have some big money players betting that this stock has a lot of upside potential for 2023. Not gonna lie, I like the play, and I definitely like WBD to the upside.
Yeah, I know, Mike. You've been talking about WBD a lot the past year, and I feel bad. The thing keeps going down just like all growth stocks have been, just like DraftKings, Zoom, everything like that. But I feel like WBD can do a lot better. They own Discovery Plus and a bunch of those bigger, or a couple other streaming services as well. And I know they have some plans that they've been doing to, try to do a little bit better. So hopefully WBD recovers back up, Mike. That's a lot of money put into that play. They're down just under $10 a share. I'm hoping to see them get up above that sometime soon and maybe start to recover back up. But man, it's been quite the downtrend lately. But I will say, look at WBD during COVID. You can see the potential this thing could possibly have whenever it, starts to finally do a little bit better. Obviously, all growth stocks have been going down right now. So I'm not trying to hate on WBD or anything. It's been almost all, even the big tech stocks like Tesla are down. So it's just all across the board we've seen selling.
No doubt. So Tom, I want to showcase the hybrid bot from Friday. So on Friday, our bot called out TLT $99.50 strike call options at $131 each. They popped all the way up to $155 each. If you want daily options alerts, make sure to check out that first link in the description and the comments down below. Basically an option alert every single day, and we're adding some really awesome new features to the Discord that I promise you won't want to miss. These new features are set to be added in this week, Tom. So towards the end of this week, we have some awesome new features that I think are really gonna amaze a lot of people. So make sure to join the Stocked Up Discord. It is that first link in the description and the comments down below. In the premium chat, you'll get access to daily options alerts, hedge fund big money trades every single day before the market closes, and a bunch of other custom bots and tools that you won't find anywhere else. Definitely make sure to check it out. Again, it's that first link in the description and the comments down below. But Tom, for the first trading day of 2023, do you have any final thoughts or anything you're watching?
Yeah, I will say we had some pretty good momentum on Friday back to the upside, especially running up into market close there. I mean, that was a huge recovery all the way back up to pretty much the closing price of Thursday. So hopefully the market can keep up with that good momentum. We can kick off the year on the right foot. You know, the SPY is kind of bouncing off this 380 support, and it's not looking too bad right now. If we keep holding this level, I think that it might kick off the year in a good way. So watch for some of these breakouts tomorrow. Hopefully these tech stocks start to move up and fill these gaps like we talked about with Netflix, Amazon, and a couple others. So I feel like there's a lot of big plays on the radar, Mike. And even though, you know, stocks are all over the place right now, there's been a lot of opportunity. You know, like look at Netflix. There's been a lot of up and down movement, lots of plays in both directions. So, hey, even if the market goes down this year, we're going to keep playing those puts and doing whatever we can to stay profitable.
Let's go. Let's make 2023 an amazing, amazing year. Just like you said, we have a lot of stocks that are moving in big ways, and that equals opportunity. So I think this year will be pretty awesome. Also, I want to give a giant shout out to today's member of the day, Jim G, in the YouTube comments. You've been commenting for a couple years now, and we just want to say thank you so much for all of the support. So huge shout out to Jim G in the YouTube comments. Besides that, guys, make sure to check out that first link in the description in the comments down below. We have some truly amazing new features set to be added. So let's make 2023 a year to remember. Thanks for watching.